markets are constantly shifting, and in today's fast-paced world, staying on top of the latest updates can make all the difference in making smart investment decisions. We'll break down the latest market movements, key economic indicators, and global events that could impact your portfolio. Whether you're a seasoned investor or just starting, understanding the big picture trends can provide the clarity you need to stay ahead of the game. So, let's dive into today's market update and what you need to know. The stock market has been on a bit of a roller coaster recently, and today is no exception. The S&P 500 showed a solid gain, with tech stocks leading the charge. Companies like Apple, which reported earnings far above expectations, have been major drivers behind the upward movement in the market. Apple's stock surged after announcing a strong quarterly performance, especially in their services division, which continues to be a significant revenue generator. These strong earnings reports are a testament to the resilience of major players, even in the face of a potentially slowing economy. It's an important reminder that the market is driven by individual companies' performance, and looking at earnings reports is one of the best ways to gauge how things are moving in specific sectors. However, it's not all green across the board. While tech stocks are on the rise, sectors like energy and consumer goods are facing challenges. Energy prices have remained volatile, and concerns about future supply issues have kept investors on edge. Consumer goods have also been under pressure, as inflation continues to affect consumer spending. These are things to keep an eye on, as any significant shifts in these sectors could impact broader market trends. The overall market movements today reflect these mixed signals, with some sectors outperforming others, making it crucial to diversify your investments and not put all your eggs in one basket. Beyond the stock market, there are also important global events that are influencing investor sentiment today. For instance, ongoing trade tensions between the U.S. and China continue to create uncertainty in the markets. The latest round of discussions has seen both countries taking a cautious approach, and the outcome could have far-reaching consequences for global trade. Any shifts in tariffs or trade agreements can have ripple effects across different industries, so keeping an eye on these developments is key for investors with global exposure. The markets are sensitive to these types of geopolitical tensions, and if the situation escalates, we could see further volatility. On the economic front, today's report on job growth was one of the most talked about topics. The labor market showed stronger than expected growth, with more jobs added than analysts had predicted. This is a positive sign, suggesting that the economy is still on solid footing, despite concerns about inflation and rising interest rates. The Federal Reserve has been closely monitoring the labor market and inflation as it determines its next steps in monetary policy. Strong job growth could lead to more pressure on the Fed to continue raising interest rates in an effort to curb inflation, which would have a direct impact on markets. Investors should be aware of these shifts, as higher interest rates typically lead to lower bond prices and can put pressure on stocks, especially those in growth sectors. In addition to job growth, another significant economic report today was the latest on consumer sentiment. While inflation has been a concern for many, consumer sentiment has remained surprisingly resilient, with many Americans feeling confident about their financial outlook. This bodes well for the retail sector, as consumer spending is a critical driver of economic growth. However, it's important to remember that consumer sentiment can be a volatile indicator, as shifts in inflation, wages, or other factors can quickly change the way people feel about the economy. Watching how consumer sentiment evolves will give us an important clue about the strength of the economic recovery. Now let's take a closer look at individual stocks that are making waves today. Tesla, for example, has been a standout performer, surging after news of a breakthrough in its battery technology. The company announced a new development that promises to significantly reduce the cost of electric vehicle batteries, making them more affordable for consumers and improving Tesla's profitability. This news has sparked a lot of excitement among investors, who see it as a sign that Tesla is still on track to dominate the EV market in the coming years. For investors interested in the green energy or electric vehicle sectors, this is definitely a stock to watch closely. But remember, while this news is bullish for Tesla, it's important to assess the broader market conditions, as tech stocks in general can be affected by rising interest rates. To sum it up, today's markets are reflecting a mix of positive corporate earnings and stronger than expected economic data. But there are still some areas of concern particularly in global trade and inflation. It's clear that there are opportunities, but also risks, and understanding these dynamics will help you navigate the market more effectively. Whether you're investing in stocks, bonds, or other assets, staying informed about these key trends is essential for making the right decisions and protecting your portfolio. If you found today's market update helpful, don't forget to give this video a thumbs up and share it with someone who could benefit from staying updated on the latest trends. I'd also love to hear from you. What are you watching in the market right now? Let me know your thoughts in the comments below. Thank you for tuning in to Everyday Elevate 2. See you in the next video.